Cooper Howard, Director and Fixed Income Strategist at Schwab's Center for Financial Research, and Nate Peterson, Director of Derivatives Analysis, for our big picture discussion ahead of this week. Hey, Nate, what stands out to you firstly today with stocks shrugging off a pretty meaty little bond sell-off, a higher dollar, except crude oil, I guess, which is down, most of the signs that would be for risk off.
Yeah, absolutely. I guess the thing that sticks out, with 10 basis points higher on the 10-year, you would think that would be net negative for stocks. Last week, Oliver, we dropped, I think, 2.6%. RSI got basically down to the 30 level on the S&P 500. So I think the most logical explanation is just basically kind of a mean reversion type of a bounce. And, there's still a lot that I think stocks have to kind of watch out for, and that's technically, we're just flirting with this 4330 level here on the S&P 500, which represents roughly the lows from late June and mid-August. Chart looks a little bit like a head and shoulders type pattern. That 4330 level represents the neckline. So it's an important level. It feels like that we're flirting with right here. And this week might be a little bit difficult when we turn over the monthly calendar over into October. I think then, there might be some lift in the sense that we'll be looking forward to earnings and better seasonality.
Okay. Yeah, the October month transition kind of looks like something we're eager for at this point, but maybe even further along the season, right? To like the Santa Claus rally time, because September, October, generally not the best time for stocks. Any kind of seasonality in bonds, Cooper?
For the broad fixed income market, there really isn't. You can dig a little bit deeper. You can find seasonality in the municipal bond market. There's a couple reasons for that. It tends to be that most issuers will have their debt payments come in December and July. So muni market tends to be driven a lot on supply and demand factors, Oliver. So there is some seasonality to it. On the broader fixed income market, no, not really.
Okay. What are you looking for this week with inflation, Cooper?
We think that inflation probably is going to continue to move down to its long and bumpy road to 2%. We think that the Fed is likely to achieve that. It's just how much pain do they want to inflict on the economy? We heard last week during the Chairman Powell's press conference that he used kind of soft landing isn't our base case, but then really kind of skirted back on that. So I think that was a notable and interesting comment to come from it. But so far, if we kind of look at Fed policy, I think right now what's important to watch is how long are they going to continue to hold rates at these elevated levels. So the inflation picture, that's going to be a lot what will dictate it. Also coming this week, we have some labor market data. We have the jobless claims. So I think that's going to be another interesting thing to watch as well.
At this point, with the yields moving the way they have, does it seem like our bar for volatility is lowered at all, Cooper? How do you think about that? Like when we kind of consider the fundamentals versus the technical, where the technical move seems like it's already kind of broken, fresh highs and follow through now for about a week.
Yeah, we've seen quite a move up in yields so far. And actually, if we continue on this move up, we might post the fourth straight week of negative total returns for fixed income. So I think that's something also to potentially watch. Now, that doesn't mean that fixed income should be avoided. That's really looking in the rear view mirror. If you look forward, yields are at very attractive levels. So we've been suggesting to our investors to consider adding some duration into their portfolio. We think the risk reward characteristics, Oliver, are attractive at this level. Even if we do continue to see a little bit of a move up in yields, we think given the rise of where we're at right now, that provides a little bit of a buffer. So I think that's a positive for a lot of our investors looking for where to find yield and where to find income in this market.
All right, let's go back to that technical conversation, Nate. I was thinking the same thing about the heads and the shoulders and the supports. I mean, it seems like a lot of these charts right now, the sector leaders, the big tech leaders, the S&P itself, all kind of looking like they're down on what should be support, which, of course, if it breaks, then I guess ups the tension.
Yeah, it looks, it's definitely waned. We were kind of going into a strong summer rally up into late July, and then we've just basically softened quite a bit. I think valuations just got too full in context with what was going on with bond yields, meaning as they're rising, how much can the bulls take in terms of pushing asset or the valuation up? in that kind of an environment. And, to Cooper's point, we're at a new cycle high here. So, yeah, if you look at, like you can look at the semis, they've broken their uptrend that started back in last October. We are, like I said, flirting. That's the funny thing about a support level within technical analysis. If technically we closed below 43.30 on Friday, but if you come back above it and close above it, then, hey, does that reinforce this as support? So you just got to be very flexible when you're looking at technical analysis in that context. But I think earnings is going to be really important because there's a lot that, we have to kind of justify at a forward PE of 18.5. We've got higher oil prices. That's a tax on the consumer. By extension, a tax on corporate profits, higher dollar. That's a tax on multinational corporate profits, higher yields. That's a tax on debt, potentially a tax on the consumer by read-through. So the bulls are going to need to come up with, a better narrative than, hey, Santa Claus rally, if we're going to look to push this into some type of a year-end rally. And that's going to come in the form of, what are the numbers? Okay, give us some good news. Are you guys holding up in terms of this economic strength? You've been really resilient. You've been able to show that so far this year. So it's going to be an important earnings season.
All right. Good setup for us because we're going to talk some earnings next. Thanks for the chat, guys. Cooper Howard, Nate Peterson. Good way to close out the session here.